the horse has the bit, in its teeth and it's running. And, if 3,000 was going to be the thing that knocked it back, it's significant that, here we are at 3,050 plus or minus, and it's still looking very strong. So I'm not saying it can only go up from here. I'm saying there's a risk of both. It feels to me, though, that the risk is the higher probability is to the upside now. And if there was a resistance out there, you could say a real all-time high using the CPI would be just over 3,500.
Bulls remain in control of the gold market, while bears struggle with unfavorable trading sessions as they attempt to time price movements. The precious metal has shown a steady upward trajectory, gaining momentum as it consistently climbs higher in the indices. On Tuesday, gold rallied into resistance at $3,036, retracing its recent minor decline. It completed a 61.8% retracement at $3,043 before encountering resistance, prompting an intraday pullback that brought prices down to a low of $3,007. Despite this, gold is poised to establish a new high and a new low for the day, signaling underlying strength. The gold-dollar index may experience minor corrections as commodity investors engage in sell-offs and profit-taking. However, gold's performance remains impressive, with a nearly 16% year-to-date gain, making it one of the top-performing assets in the broader commodity markets. According to Lobo Tiggre, CEO of Independent Speculator, while gold has reached new all-time highs, the assumption that prices must decline from here is uncertain. Breaking past previous highs eliminates technical barriers, allowing for further upside potential. Market movement now hinges on whether the bull trend continues toward higher targets or if a bearish correction deepens. If gold surpasses its record high, it could gain momentum toward the next key level, around $3,080. Tiggre adds that beyond technical indicators, the fundamental backdrop remains supportive of gold's long-term strength. Inflationary policies, increased European military spending, and economic uncertainty continue to drive demand for safe haven assets, such as gold and silver. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
So what can I tell you that 100 other guests haven't already told you? All of the above. I do think it's important to remember that the central bank buying has really put a floor under there, and it continues. It's at a substantial level. It continues at an elevated level that we've seen since the quote-unquote weaponization of the dollar. And I think that's important, not just because it's there and it's a big mover, but it's because it's the kind of thing that doesn't go away. Right? Even if Trump and Xi make a deal and they announce it tomorrow, China's not going to go back to thinking, oh, it's fine to have our financial life's blood regulated through New York and Washington, and certainly not the Russians, right? And the global South, so-called. So I think that I'm calling it a paradigm shift. It's a one-way door. I'm not saying that central bank buying will forever be elevated, but it is a force that's not going away. And it's really significant that you see times where there's things that would have in the past or recent past been headwinds for gold, the strong dollar, you can see dollar and gold going up at the same time. Or ironically, inflation going up. It's ironic because gold is an inflation hedge if you pull back and look at the big picture. But short term, it doesn't correlate with inflation. So you see inflation going up and gold going up like an inflation hedge should. What's wrong with that? It's because those old drivers are not the only player in the market anymore. And I just think that's really, really important. So on top of anything else we might say about how great gold is, right? Remember that there's this let's maybe not call it bedrock, but there's this really solid new buyer in the marketplace that's not going to go away for a long time. And that matters because of what I'm about to say is, you're asking me, here we are near nominal all-time highs, well over 3,000, even on the spot, not just the futures. It's hard to just stand on an all-time high and say, it's going straight to the moon. I don't have a big red buy button that some other commentators might like to mash on TV. But what I'm saying, though, is that I think it's a mistake to say, 3,000, that's it. It's got to go down. Honestly, I think it's a coin toss. That level that we're at now has already met many people's, targets. And I could see that triggering profit taking stops. And I can see that being the very thing that brings on the correction. A technical analyst would probably argue that. On the other paw, even a technical analyst would say that when you break through an all-time high, there is no ceiling.
No, absolutely.
There's nothing there, right? So how high are you going to go? Who knows? And, the horse has the bit, in its teeth, and it's running. And if 3,000 was going to be the thing that knocked it back, it's significant that here we are at 3,050 plus or minus, and it's still looking very strong. So I'm not saying it can only go up from here. I'm saying there's a risk of both. It feels to me, though, that the risk is, the higher probability is to the upside now. And if there was a resistance out there, you could say a real all-time high using the CPI would be just over 3,500. It's not a price target. It's not a promise. And, if it wants to run, I could easily see it running to that level. In the context of a metals speculator as a gold bug, I see a lot of this as really noise. Sure, tariff scare, geopolitical scare, any scare is good for a safe haven asset. But these kinds of tailwinds, and they are tailwinds, I'm saying that's real. I'm not poo-pooing it. I'm saying it's real. Yeah. But they tend to be temporary. I'm not going to use that other T word that Powell just used. But these kinds of tailwinds, that's not the fundamental, defining the marketplace and where we're going. I think the more important thing is to realize that the agenda in the United States, unless it pulls $1 trillion rabbit out of its hat in year one, unless that happens, which is big ask, the agenda is inflationary, and the agenda globally is inflationary. European rearmament is inflationary. The tariffs, people like to say, oh, it's transitory, right? It's a one-off thing. It's the rate of increase is one-off, assuming there's no more tit for tat. But that doesn't mean prices go down. It means, that increase, that rate of increase, the tariff goes away. But the prices don't go down.
Right.
So you're still looking at a more expensive world. So all of these things are real. All of them are material. But what really counts to me is, this new long-term buyer that we talked about, a highly inflationary outlook all around the world. And that's good for both monetary metals. You slipped the S word in there earlier. Yes, I do still see silver as a monetary metal, even though my friends call me Darth Silver. Yeah, I'm bullish on copper as well as gold this year. And it's impossible to be, in my mind, bullish on safe haven monetary metal gold and prime industrial metal copper and not be bullish on silver, which sits quite, and moves in the market squarely in between.
The likelihood of a U.S. recession remains uncertain, with a recent Deutsche Bank survey suggesting nearly equal odds. The survey, conducted between March 17th and 20th, found that the probability of an economic downturn within the next 12 months stands at approximately 43%, based on the average response of 400 participants. This highlights the growing concerns about the direction of the U.S. economy, even as key indicators continue to show resilience. While unemployment remains low and economic data suggest continued, albeit slower, growth, consumer, and business sentiment surveys indicate growing concern about a potential slowdown. Federal Reserve Chair Jerome Powell recently acknowledged these concerns but maintained that the economy remains strong overall, citing significant progress toward economic goals over the past 2 years. However, market participants remain wary, as uncertainty surrounding monetary policy, inflation, and geopolitical tensions adds to the risks. The implications of a potential recession extend beyond traditional markets and into commodities such as gold and silver. Lobo Tiggre, CEO of Independent Speculator, notes that while precious metals are often considered safe haven assets, they are not immune to volatility during a liquidity crisis. In times of financial distress, investors may liquidate their gold and silver holdings to cover losses elsewhere, as seen in past market crashes when margin calls led to asset sell-offs. Let's get back to the interview.
My biggest concern is I think the evidence is mounting that the Trump team is planning to front load the pain here and create a recession or, do all the harm they're going to do as much as they can, pack it in up front. So by the time the elections come around, then that pain will be receding in the rearview mirror and maybe some of the good things that come from it. If deregulation and, tax cuts and all these things are eventually good and they create growth, that takes time, but the immediate adjustment can be very difficult. The impact of the Doge firings, I think that's really just getting going. I think it will be substantial. Deregulation, that's great. I'm all for it. But, the immediate impact is chaos. Who's signing my permit? I don't know. He's not out to lunch. He got fired last week. Nobody even knows. So, there are real risks in the near term of, let me be careful here because I'm really not criticizing the reduction of government in the U.S. As a libertarian, as an anarchist libertarian, I've been wanting this for years. never imagined that somebody would go in with a sledgehammer the way Elon or Milei's chainsaw, rather than the scalpel that you would think. So I understand why, and honestly, I think the scalpel approach probably wouldn't work if they were being super careful and making sure nothing went wrong. I think they'd still be picking the color of the curtains in the Doge office. Nothing was done yet. It was
Right.
sledgehammer or nothing. So I get it. I'm just saying there's a price to be paid for this. And, if that's a hard landing or hard recession, this year in the months ahead, the odds of a major market, if not crash, at least, reversal are serious in that environment. Industrial commodities, they're even Dr. Copper are likely to go into reverse. And even though uranium is already down already, it's an energy mineral. I think it could go lower just on a knee-jerk basis, even though it shouldn't. I could see that happening.
Right.
And even gold and silver, monetary metals. If there's a major liquidity event, people will sell their gold, not because they want to, but because they have to. The margin clerk's on the phone. You've got cover, right? And they'll sell what they can get a bid on. And so we've seen that before. And that's why I say hope. If that happens, I am accumulating cash now, and I expect to be buying with both fists or paws, as the case may be.
Despite this short-term risk, gold and silver maintain their long-term appeal as hedges against economic instability and inflation. With rising uncertainty, central bank demand for gold remains strong, reinforcing its role as a store of value. As markets navigate the balance between economic resilience and potential downturns, gold's performance will likely be shaped by both immediate liquidity pressures and its enduring status as a safe haven asset. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.